elevation. Cool and Dre. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Dropping in for a Patreon promotional, meaning that this will be on the Patreon first and it'll go on YouTube later. Those on YouTube watching, welcome to Goofy Investing. This is the underground where we talk about small, mid-cap growth stocks. Growth is the oath, all right? We're going to be looking at a stock called Nbis, all right? Ticker NBIS. This was a requested ticker. I did do a video a year ago here, March 1st, all right, of 2025. We're in March 7th of 2026. So close enough, okay? We got a year range there, all right? We'll talk about some things that I see within the actual stock business model and so forth. And I will give you guys an actual price action prediction for March of 2027. So stick around for that. All right. So market cap is 22.6 billion. This trades on the Nasdaq for $89.33. This is a company located in the Netherlands, in Amsterdam. All right. Information technology and system software is the industry. Got about 1,371 employees. I can see that scaling up more given some of the guidance on their recent earnings. We're going to talk about that. But first, let's look at the actual balance sheet real fast, do a little sniff check there, and see how we're trading, okay? So 4.89 billion in debt, 3.68 billion in cash. Net debt of about a little over a billion. Enterprise values 23.81 billion. Well, we look at these margins, okay, currently they got 68.63% gross margin with negative EBITDA, but positive net income. Now, I'm going to preface this with a bottom line up front. These margins are going to be nothing. Why is that? Okay. Well, on their actual latest earnings, they gave guidance that they're going to, they plan on raising CapEx in the range of 16 to 20 billion next year. Okay. The business model. Okay. So this is a company that's a data center play build out that it serves as a global infrastructure for data centers, for AI data centers, if you will. This has been a hot topic and a hot commodity within the world in a tech race to get these data centers using NVIDIA GPUs and so forth, all right? This company capitalizes off that business model, and they're in the phase of high rapid build out, all right? So if they plan on investing and raising CapEx to 16 to 20 billion, I think they're going to shoot on the upside. I think they're going to invest 20 billion. They're really going for it, all right? So I got some thoughts there, all right, and we'll talk about that. But let's go to consensus estimates here. Great consensus estimates for radical growth beyond the eye can see, 10 years out, okay, about 9-10 years out. 72 billion in sales projected within the next decade, all right? That is nothing to sneeze at. Can they do it or can't they do it? Will it be meaningful? Will the margins all work out on the back end? That's hard to say. Probably so if they accomplish that much scale. They, depending on that actual margin profile, feeding down to the bottom line, that could be a worthwhile investment for investors. But what are they doing right now in sales? Well, they did 500 on trailing. They got 529.8 million in sales. Looking at their earnings, they have grown these sales about 500%. Slight miss on the top and bottom, but all in all, at this phase in this actual company's growth trajectory, that's really immaterial, to tell you the truth. The street. What is the street looking at? Because this stock was going up to 135 and now it's back down to 89 bucks. All right. So the question the street has is how are they going to make this capex investment work? All right. Company is guiding that they got enough cash on the balance sheet or to cover about 60% of the capital requirement. Let's look at the actual balance sheet itself. All right. We'll do some slight balance sheet analysis and then we'll move on. All right. So 2024 they had 2.4 billion and now they got 3.678 billion. All right, we'll go on a quarterly basis and see how they're managing it quarterly. Little up and down stuff going on. All right, 2.4. March they had 1.4. June 1.6. September shoots to 4.7, and then December decline of about a billion. So a little bit of volatility on the cash balance, okay, going up and down, but more so of a decline, ever so slightly, okay. Their actual debt profile. Let's look at how they're handling their debt. Debt's going up, guys. So slight decline on the cash, more incline on the debt. Not a good pattern, all right. Not that I'd like to see. My question is if they say they got 60% on the balance sheet, where are they finding that 60%? I mean, maybe they're including their total assets, but when I look at their accounts receivable, they get about 851 on total receivables, which means accounts receivables is anything within a year coming into the company via orders and so forth, that the company is supposed to receive in cash within a year. That's going to be documented as accounts receivable. But their accounts payable is 1.2 billion. Same idea, but the inverse, all right? Anything going out of the company that's owed within a year, it's going to go on the accounts payable side. So if they're going to raise capex, and use the balance sheet's going to be destroyed. This is not enough scale on the balance sheet to sustain that type of level of capex for this particular equity. So what's going to end up happening? Well, stockholder equity. Let's go down here. All right. Stockholders equity and common equity is going to take a hit. I probably going to take a hit down to probably get cut in half. Wouldn't be surprised. All right. So there's that to consider. Cash flow. All right. They're doing positive net income right now on the quarter and negative free cash flows on the levered free cash flows right there. So with their hired capex, they will not be net income positive. All right. Not a chance in the world. These margins are not going to be really reflective of the actual business model due to their added data centers, higher capex, and so forth. So you could scratch the margin profile. You're going to find out how these margins land in a couple years. But on the bright side, they will have scale here because their guidance on the 3 point, they're guiding around this 3 billion to 3.6 billion. Let me go back up here. Let's do guidance. All right. So let me see here. All right. So they're guiding 3 billion to 3.4 billion, all right, for the full year of 2026, but they got a revenue run rate of 7 to 9 billion on actual contract landings and so forth. That's cute and all, but if you're raising your capex that high, what is it going to do to the stock and what's going on? If you go back to my video a year ago, all right, I mentioned the possibility of a World War III, okay? Now, I'm not saying we're going to have a full-blown World War III Armageddon. That's not what I'm saying. But if you have a big enough war, especially like with Iran and Russia is attacking Ukraine and there is World War stuff happening, okay, that could threaten the infrastructure of investment capital to continue to flow into these data centers. All right. So with the influx and the threat of the actual petrodollar, when this trade removes with Iran and what's going on right now, that dollar can be threatened, and that actual petrodollar going into the market, fueling AI investment, can be threatened, and you might see contraction. In fact, I believe contraction will happen. Um, so what does that mean? So their ability to raise capital will be limited. So if they're going to go for it and throw the Hail Mary shot via trying to get the touchdown for this with a 16 to 20 billion dollar capex investment, they need to strike when the market is hot. What is that going to do? What do I project for shares outstanding? Well, let's go here. I think shares outstanding are going to increase anywhere from 75 to 100%. I think they're going to double shares outstanding by this time next year. Um, Balance sheet will take a hit, mass dilution, margin contraction. So what do I think is going to happen to the stock? And in an actual closing, what do I think about it as an investment? Well, so I made this video March 1st of 2025. Stock today in March 7th is $89.33. This time next year, I will not be surprised, March of 2027, that this stock will be trading at around the $32.50 range. Okay, guys? So, and why is that? Well, if their capex is raised that much, if they do a $20 billion capex expenditure and their market cap is 22.6, and they're only going to do 3.5 billion, okay, I'll give them credit for 3.5 billion, even though consensus estimates is 3.35 billion. Let's say they do 3.5 billion. So what? We'll go to their valuation. I think the contraction on their sales is on their forward sales is going to go to 2 times, and on their trailing, it's going to reflect as such. Okay. So if they continue to execute and grow and hit these consensus estimates, they're going to be revenuing sales of their market cap in 2029, and then surpassing surpassing sales of their market cap at 2030. And a lot of how will the stock react? Well, it's going to depend on that margin profile you see. All right. If they're actually building moat and the customers are not leaving and they have a high sales retention or annual retention run rate, and they have low churn on this, if they establish moat and margins are there, could be a worthwhile investment. I assess this can be a $60 billion company. Okay. But in reality, what do I think in 5 years is going to happen? I think stock could maybe be worth $150, $160 in 5 years. Okay. So with the actual turmoil of volatility going in, all right, with this war and so forth, everything that's happening, the market will be conservative on the AI capex of the big tech and so forth. If big tech slows down their capex, Nbis will get hit hard. And if Nbis invests or deploys 16 to 20 billion in capex, and meanwhile Microsoft and the fuelers of this capex investment slow down, you're going to have an inverse rate of return to where the demand will not translate down fast enough into the equity to this business model. You're going to see contraction in the stock, guys. All right. So with them being in the Netherlands, it's not for me. They're getting corporate sales from American companies and all, but auditing issues, all these things come into play when I look at Nbis. It's not for me. That doesn't necessarily mean it's not a good investment. Best of luck to all the shareholders of Nbis, but for that reason, I'm out. Okay. Letter to the shareholders. They're doing good stuff. I'll admit the numbers are looking real good, but we're going to see how they handle this CapEx going for 2026. All right. Board of directors, with the lack of auditing, little bit of gaps in the auditing, you don't know if these directors are just pocketing the money. All right. So if you're getting value out of this, like and subscribe. Check out my Patreon where you get buy and sell alerts right to your phone. You get the inside scoop of what I'm doing. In fact, just yesterday I scooped 1,000 shares of HIMS. You're gonna see what happens with HIMS on Monday. All right. So you're going to get the hot stock picks, you're going to get the trades, you're going to get all that stuff. You're also going to get the community, guys. Community of high level investors. A lot of activity on here. My captains, they're pretty high caliber growth investors. If I'm not the one to be the mentor, you're probably going to find another one on there anyway. All right. Check it out. I got a free 7-day trial, $14.99 a month. You really can't beat it. Pay annually, you'll get 20% off. It's a no-brainer. The actual membership pays for itself over and over again. I'll never raise the price on you. Check out that free trial. If it's not your thing, go ahead and quit before it, activates to an actual membership. No harm, no foul. I won't get my feelings hurt. But with that being said, I hope you guys got value out of this, out of this actual stock ticker analysis. I appreciate all of y'all for supporting me. And with that being said, I love y'all and take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland. And I show you how deep the rabbit hole goes.